Good afternoon and welcome to the end of day review for today. And today is March the 3rd, 2025, and it's a Monday. It's the very first training day of this week, and we have a beautiful and bright accents. Last week we see. Okay, anyway, before we go into the detail, let's do a brief economic events this week. So we set our mind in right perspectives. So this week we have the CPI data. Excuse us, not CPI, we misspoke. A non-farm payroll, is that right? Yes, employment division, which non-farm payroll come out. But we have an additional that is non-scheduled, not routine. You have a Jerome Powell speak, so we don't know where he speak. Maybe where as some kind of it's not an FOMC meeting, but anyway, it may have some impact. But the point we try to emphasize this week is a non-farm payroll. All right, you have a non-farm payroll. That's a huge. Whenever we start the first week of the month, we have a non-farm payroll. So that's the routine right there. And we are in week 10, and we are still in quarter one. One quarter, we have 13 trading week. So we are in quarter one and week 10. So 3 more weeks, we finish this quarter. So that here's we are right here. So very first week of March right there. So we want to see how the market moving, set a tone for the month of March. So that's the end of month. Look like we have a down close for March. Yeah, look like that is the trend right now. Alright, so we are in week 10, and we have a CPI data. Again, we misspoke again. It's not CPI data. It's a non-farm payroll. That's what they call non-farm payroll, and non for employment situation right there. So you're going to release at 8:30. We did do the episode on non-farm payroll. So if you want to see, have an idea, trade idea, or how to formulate your trade idea around non-farm payroll, we did 2 episodes on that. The next special episode we're going to do is on the CPI data, and then will be FOMC meeting. So that's our roadmap right there. All right, so we go into this week. It's very interesting. We go to this week or today. Last week we have a Dow close. Let's look at the candle charts we took at the beginning of the day. So here's what we had. So our routine that before we start the trading day, we take a screenshot of the daily time frame, including the weekly right there. And then at the end of the day, we take screenshots. And then we take the same for the lower time frame, which is 15 minutes, which is the time frame that we trade. So the daily level and the daily time frame and the weekly time frame provide us the level or the liquidity level for us to aim for the entry or target for that matter on the lower time frame, which is 15-minute time frame. So here's a screenshot we take around just before 6 a.m. Eastern time. So we see the very methodical how the algo set liquidity. For last week, we see the Monday it's down close and it tests from above. And then the Tuesday, the following day, is break this level, 59.94.50 right there. And the Wednesday is a non-expensive move, pretty much the same like Tuesday. I mean, the Tuesday may not be. It's kind of between expansion move and non-expansion move. But basically, it's a accumulation or consolidation, for lack of a better word. So we do a very deep dive analysis right there. So on Thursday, we have two options. One is we go long, right? Because it's test from below 1994, so it's gonna break that level. But if it failed to break, then basically it's gonna break down to 59.48 right there. And not only it break the level, but it go all the way to the level of what? The level of 59.06 right here, which is, this is a candle rank theory right there. So it's with sell side liquidity and then go to buy side and then go sell side again. And then Friday it just reversal back right away. So it closed above this 59.48. And then when it opened for today, you see it looked like it touched it level and it opened above this level also right here at 59.67 right there. All right. But we look in the weekly, we feel like it's not finished yet. You see that? Because it tests from above this level, right? The level right here, 59.06 right there. So you see, very interesting how the test from above, from high time frame, manifest itself into a low time frame. In this case, the weekly, and then it manifests in the daily right there. So basically, at this level, it breaks and then revert back right away. That's where it creates a wick right there, a wick candle right there, wick, which is test from above in this case. So that means it's a bearish. It's not really. Be careful. Sometimes we thought, wow, it's revert back, then it's gonna be bullish. But actually, it's not. It's not. It's just a trap. Trap that people try to go along and then boom. Because it need, basically, maybe there are not enough sell side liquidity. Then it need to make one more round that it can be test from up and then it can be broken right there. And that's exactly what happened today. So here's the 50-minute time frame we took at the same time right there. So basically, you see the open 18 is take out the high, right? The buy side right there. Then after that, it just consolidation right there. So it just wait for a trigger in order to go and rip all outside liquidity. And that is what happened. Like what the rewards the real-time tab that we recording, what happened at 9:30. So we have a little bit of clue or indicator of where the market heading. All right, here's our recording. So keep in mind that at 9:30 when it opened, 3 minutes into the 9:30 opening bell, it broke the level, or it revisit the level 59.94. Let's go back to the charts. What do we see? So 94 right there, that's level. See that? We did mark that level. So basically it tests from below and then it break it and test from one more time. So this guy gonna touch that level and boom. That's exactly what happened. Yeah. So we thought that it's gonna break that level. Right, you see that? It break, test from below, 1, 2, then boom. That is a type 1 reversal right there. And it looked like that, right? It looked like just like that. It looked like it's gonna break the level. Right? Because if we look on the high time frame, it looks like it can break the level because break test from below twice That is the Taiwan reversal. Let's revisit what is Taiwan reversal that we are reversing to. So make sure we are on the same page. All right, here's our framework when we're working to trade them. So break, test from above, test from below, and reverse. That's the Taiwan reversal for long setup right there. Right here we have break, right, test from above, below, 1, 2, 3 times, and then we thought gonna reverse. But here the tricky for us. The break right here is not a clearly break. It still have a loss of wick in the bottom, which is test from above. So that means very bearish right there. The same for Wednesday right there. You see that? Yes. And also the heavy sell-off on Tuesday, even though it tests from below, but it's a very bearish. So it look like it's gonna be reversed from here, type 1, but it did not happen. Yeah, right here it looked like that 3 minutes, but after that we can see that it really flipped. So the magic, it touched that level. It needs to test that level, right? It tried to break it, but it fell. So the minute that is hit that level, you can see it really flipped. And we did take advantage of the sell-off right there. Just momentum trade, so we take a quick profit and we get out. So let's play a little bit, and you can see it flip. Yes, see that flip right there? Boom, boom. Yes. Okay, so we did take a trade right here because we see this right here. We see a lot of buy side, sell side window here. So we're gonna rip that level, and we think that it's gonna hit the 59.48 because we look on a high time frame. We see that it ripped here, then it may go down, and for sure it's gonna go down to the 67. Yeah, let's take a look at the first trade we take. So here's the screenshot of first trade we take. You see that we engage 9 minutes into that. We just see the flip right there. That's opportunity right there. Whenever you see 9:30, it flip. Not whenever, but in this case. So we maybe get lucky anyway. So and then it come back. We a little bit feel like we make mistakes, but we decide to stay in the trade, and we see flip again, and then we immediately we know that it's gonna be go down to 48 right there. We mark our level right there, so 48. Look at the chart to see 48 right there. Yes, that's the level 48 right here. You see that it touched that level right there. This one touched, and yesterday it's close above that level, so it may retest that level again, 48. So that's our target, the logic right there. That means there are lots of buy side, sell side liquidity right there. So, and we saw the flip, so we want to take advantage of that, and we take the profit very quick. We don't even wait for this. We put out there, which is a quick profit for us. But you see that if we let it run all the way down to 48, it goes to 48. Beautiful nick, you see that? So if we stay in the trade longer, we're gonna have definitely we're gonna have bigger profits. But anyway, it's very beautiful in execution anyway. All right, let's look at the second trade. Oh, that's the first trade. All right. Before we go to second trade, let's look at the charts again. Yes, so right there, we go down, boom, see that? So, okay, so we take advantage right here. Because right here, we just say it broke a very key level right here, and right here you have test from above. That means it's not finished yet, but it does not have, because it moved very fast, so maybe not enough order, right? So not enough buy sell side liquidity, it have to retrace. it have to retrace in order to get enough liquidity, and then it make the next leg down. So that's it, the theory there. So we take advantage of this one. It definitely gonna retrace. It's gonna bounce from here. So we did take the second trade, which is a long. The first trade was a short, but the second trade is a short. So first trade we take is short up, and right here, the second trade we take, we kind of we saw it flip right here. We thought that we need to go in along, but the problem is we go in too early. We wait for next candle right there. We should wait for next candle, and that's exactly what happened. You see, we go long too early. That's why we got stopped out. We had to wait for this candle, and perfect. We just do one contract right there, and we good. Just a small loss to try out. Then the third trade we take. So we learn from this. So we top out on this candle, right? So this candle, we definitely see opportunity right there. We know for sure that this candle is overlap or inside of the candle. So this is a very short retracement. So we have to take a quick profits in order to get out right there. So we go in, and then we see that it's a very solid momentum. So we add more contract in there, and look beautifully. It did hit exactly 15.3R right there, which is 50 point right. We're so surprised, but we hit the jackpot right there. So we take profit early, and then we let the last contract run, and did hit that level. 59.64. Yeah, it's 59.64 right there. It hit the level, and we get out. So that's beautiful trade right there. The trade number 3 that we take. Alright, so now let's take the look at trade number 4 that we took. So far we took 3 trade, right? And we win 2 and lost 2. When we win 2, we win big, and we lost just one contract right there. So right here is the trick that right here we can see the reversal right there. Remember, it's expansion move and followed by a retracement or consolidation or non-expansion move, for lack of a better word. You see that? That's right there. You mark the high right there. As soon as it break the level, it tests from above, that's like boom, it's reversed. So this is called type 1 reversal right there. Right, look at the type 1 reversal, the setup we have right here. For the short setup is right here. Break, test from below, boom, reverse. So we see that setup. We didn't take the short. We take profit right here on the trade number 3 right there. But the short, we didn't engage on the short at all. And then after the short, you see that it breaks that level, and then it tests below that level. So there's no reason for it to come back to this. The only reason to come back to this is to break it, and that's what our trade logic right there. So it become a what? It become a type. Yeah, you can saw a type 1 reversal also. Break, test from below, reverse. So go back to this is a type 1 right there. You see that? Break, test from below, and reverse. So that's what the logic when we go into this trade. And then when we see is start moving up, we add contract. We'll add 10 more contract to that, and beautifully, you see that it can continue move to our targets. We take the profits. We only let the one contract run to the target, so we take the profits, and perfectly, you see that the minutes we take the profits. I mean, if we want we can just close our trade because there's no reason for it to flip back. The only flip back right here is just to go down. But anyway, it's just one contract, so we let hit it target anyway, and it did come down. We see that if we did take the profit right here, if we fail to break the target right there, we're in big trouble because we have we have a huge side right here, 11 right there. So we're so glad that we execute flawless for trade number 4. In general, today we execute very good. Basically, we feel like we are really in sync with the market. It's remarkable there that we see the difference, that we're so calm, we execute a trade beautiful day. All right, that's trade number 4 right there. So as soon as we see this flip right there, all right, we're thinking about engage short right there, but we know that there are a lot of sell-side liquidity right here. You see that test from above, that's the signal that there are a lot of sell-side liquidity, or there are not enough sell-side liquidity. It needs to build up the sell-side liquidity. So that idea. And also look on the high time frame, we see level 28, 59.28 and 59.24. Look on the high time frame, daily time frame, you see right there, the level right here. Yeah, that's around the low right there. Either the low of this candle and this candle. That's the 28. You see right 20 right here. The 28 should be around that level. Yep. Let's see the 28. Let's look on here. So what we see, what the low of this? Yeah, this is the 24 right there. You see the low 24. So it can go to 24 or right here. It's another level. Yes. So this one is 35. That is the 35. So the low of this, what's the low of it? 45. So we wonder where the 28 come from. 23, 24 is, yeah, the 24 is good, but we wonder where the 28 come from then. Right, go to the low. Yeah, somewhere, because we use different platforms. It's okay, the 24 go down there, so we know that it's gonna come down, but we win too much, so we kind of reluctant to engage right here. But it's beautiful short setup. You're gonna see, you see the level right here, and it flip right there, and there's no reason for it to come back to the 48. You break 48, then go in short and aim for 24. But we win so much, so we kind of a little bit fear to give back. But next time we can engage. Right, the reason that regardless how we feel, we have to take the trade when it fall into setup. That's the whole idea of exercise right here. So later in the afternoon we'll also see a short setup, but we refuse to engage because we don't want to get back to gains. But that's one of the exercise that we need to take it. You know, regardless of how we feel or how we win, when a setup show up, we have to take it, because you see that level right here, it become a neglect out. If you break out right there at 59, 48 or 49 right there, yep. So this happened at what the time frame of this one? So yes, around 11:30, beautiful right there. That's the right time right there. Boom! It flushed down. All right, take a look at trade number 5. So we just take advantage of the retracement. So today, most of the time, we just just trade reversal or retracement. We didn't follow. You see right here the trade that we think that we're gonna check it. You see it did right there, but it did not reach this level yet. So if we aim for this, right, you remember right here, short right there, don't aim for this yes or this yet, but aim for this level. You can see that it hit that level. So if we short, then we aim right here. Don't let it run. So right here we see an explosive move right here. It's basically it a retracement very quick. So we take advantage. We increase the size right there. We enter there and then we add more contract in there, and it play out beautiful. Right here, it make it a little bit nervous. Right, it come back, and you see that it come back, and we're a little bit nervous. But after that, we wait for 45 minutes or so. It go into our direction right there, and we wait one more. That finish contract, we want one more, and it hit our target beautifully. 64 it hit right there, so it hit exactly the target we want. That's beautiful. And as soon this candle go up, it retrace right away, and it make a huge next leg down. So if you can short, we can win that also. That is right here. Right here. Right, we take the target. We take profit, but here target later. Next candle, you see that, and at 55, boom, it flushed down. See that? It's a perfect setup. You mark that level, you see that? Break test from above 1, 2, boom. That is a type 1 reversal. Beautiful. Alright, let's take a look at the last trade we take. It's also a long trade. So you see that after the flush, and now we see the signal right here. You see the mark, this candle right there is at the level 59.14 right there. So this is a candle after expansion move, or it's called a consolidation, or another word for retracement right here. And we see that it break the level, it break, and then it's reverse, and then it break back again. Then there's no reason for it to break again. There's no reason to come back to that level if for only for reason that it break. Then the next target is going to be around here, or the safe target is around this. So let's see how we handle this, right? So we add contract. Wow, this was scary right there, right? So we add contract and it come back against us, but we stay in the course right there, and boom, it hit the target. Wow, perfect. It reached above that that high of this candle. Wow, you see that? The minutes, if we don't take the profits, you see that? That the trick right there. You see the whole right here is a set of retracement, boom. Yeah, you see that level. Break, reverse, and then break again. And that level, you see, it's failed to break that level. Just give us an idea. Or we mark this, the low of the candle, you can see a setup for it also. So yeah, we take basically 6 trade and we win all of them except the trade number 2. We lock only 1 contract, so we have a huge win today. This is an amazing day for us. So here's our performance today. That is the biggest win we ever win. We win $25,000 and about 13 trade. Yeah, because when you add into the current trade, they count it another trade. So basically, force it's only 6 trade. You divide by 2 right there. So it's that roughly about right. Oh man, and this is a amazing performance right there. All right, before we wrap up here, we go to the charts. I want to show you right here. Yes, right here you have a setup right here for the next leg down. Right here, it's so clear right here you have a next leg down, but there's not a next leg down here, a little bit hard to see. A little bit hard to see on this one, but you can see that the level right there is just a test from break, reverse, and there's no reason to come back to this level. The only reason come back to level is to re-break that level. Yeah, but this setup is so obvious right here. As soon as you identify this candle, you see that it move back and forth this level in order to build up sales activity and wait for the right moment. Is that 12:45? Then it rip and then it do another 2 hour to consolidate or build up liquidity or liquidity engineer for that about like a hour, and then boom at 2:45 it rip another leg down right there. So beautiful. If we understand the really well, then here we go. We can invest as much money as we can. Anyway, that's it for today. We thank you for your time and interest. We're always grateful for these opportunities. Day by day, little by little, we're getting better and better. We do what we love, then success is coming our way. Bye for now and have a great night. See you next time.